Hello everyone, it is Sterling here from daytradingforexlive.com, and I'm going to go through the month of June. I'm going to go through every trade that we had during the month of June. If you watched the video from May, you will have seen all the trades that we had setting up during the month of May. Now, for anybody that's not familiar with day trading forex live, it's really important to remember that I'm not just pulling these trades out of a hat and saying, well, I would have taken it here, or I would have taken it there, or maybe I'd have taken this trade, maybe I had taken that trade. Every single day, this is again the important part. Every single day before the market begins. So the European session, what I consider the start of our trading day, is at 2 a.m. Eastern. That is the Frankfurt Open. That's the European market open. So every day I do a video around midnight Eastern, 2 hours before that, and I list the exact levels that I'm going to trade from the following day, down to the pip. They're not a 20 pip area like I kind of do on the front end of the site in the commentary. And I list every level I'm going to trade from, which again I'm not really doing on the front end of the site. I list a good majority of them. But anyways, in the review I list every single level down to the exact pip. And then our entry, which is the secondary part, which is extremely important, is mechanical. So when the market reaches those predetermined levels, and once a member learns the confirmation entry and all the rules of the confirmation entry, it is a black and white yes or no trade. It's either a valid confirming trade or it's not a valid confirming trade. And then second, it's either a losing trade or a winning trade. In other words, you know exactly what happened because the criteria for the confirming entry is black and white, and therefore, you know, two traders aren't going to get separate results because the entry criteria is mechanical. So again, I give you the exact level I'm going to trade from, and then number two, the entry is mechanical. So for somebody looking to learn how to trade, it's, in my opinion, one of the easiest ways to learn how to trade because you have so much of the process that's done for you every single day. Now, I don't want to have to do that for people for the rest of their trading career because maybe someday I won't be around. Maybe I decide, I don't want to run the service anymore. Maybe down the road that happens. And if that time does occur, I want masses of self-sufficient traders. I don't want traders that are saying, "Well, Sterling, I need your levels every day. I need you to pick the levels for me." That's not the goal. The goal of the review is to show you why I'm doing it so you can do everything that you're about to see on your own, and you don't necessarily have to listen to my review every single night. Now while you're learning, it's absolutely essential. That's that daily guidance that really shows you how to apply the rules in the course. That's where education breaks down. It's one thing to give somebody a course, but then you have to show them how to apply it. And that's what I do. I give you the course, you get the bank trading course, you learn the rules, but then every single day, I don't just give you the course and say, good luck applying it. I give you the course and say, now you've gone through the course, now watch the daily market review every day and see how to actually apply the rules in real life. And then in addition to that, I'm going to give you the exact levels to trade from to actually essentially show you what and how to apply the strategy every single day. So that's why it's so helpful, and that's why if people use it, it's helpful. If you don't use it, well, it's useless. But for those of you that put forth the energy to use it, these type of results can be had by anybody because again, the entry criteria is black and white. All right, I've harped on that enough. Hopefully you get the point. If you don't, well, I don't think any words I can say will get the point across. So let's go into the trades. We had exact opposite of May. I mean, May we had just so many trades, and then in June the market just died out as far as trades for us. But the beauty is, even in a market where we had a very few trades, we only had 12 trades on the euro and the pound during the month of June. And just a real quick note for anybody that hears 12 trades and wants more, well, number one, no, that's another subject. But the point I would say, just so that fact alone doesn't push people away, is that's on two pairs. If you're trading 5, 6, 7, 8 pairs, trade quantity can be increased dramatically. So this is on the euro and the pound. I want to show you what's possible with just two pairs. So again, few trades, but let's go through them. Let's start off with June 2nd. I'm going to try and go through these a little bit quicker because I know it can get boring. But anyways, June 2nd, we had a long setup from the backside of a level at one spot 52.21. So basically what happened is the market made an initial surge to the upside, came into the backside of a predetermined level there at 52.21, and provided a stop run and a confirmation here to the downside. So we got stop run, and then we confirmed back up depending on what your entry point was here. Ultimately, the entry for some of you, and this is why I'm not going to count this as a full trade. This is one of those kind of rare circumstances where some of you are confirming and some of you are not. The confirming candle has the rule that in the case of a long setup, it needs to close in the upper 1/3 of the candle. For some of you, this candle missed, and it was not the majority, but for some of you it did. If that's the case, well then you probably wouldn't have had a shot at the entry. But for those of you that didn't, it was a fairly immediate plus 40 and a nice 4% trade. So what I'm going to do, just to be fair, is I'm going to count that as half, and then that way, it's a split. I'm not going to try and say, not going to count it as a full trade. That way, it's at least fair on the record keeping here. So anyways, first trade of the month was that. Now we go over to the euro on the same day. We had a trade from 0972. So our trade there from 0972 was right here. We came into this level. So we come into this level here. We get a break. We get a confirmation of the downside. And then the initial surge down, our entry would have been right about here. So 20 pips at 0971.72. And the initial surge down there was 25, 27, well, closer to 27, 28 pips, which put us at break even at that point, which is a good thing because as you can see, the market worked back up to the highs, came back down a little bit. Bottom line, though, is that the initial surge down was enough to get us to break even, came back, tagged us a break even. Probably were pretty disappointed when it tagged you at break even at the time, but then you're probably quite happy as it surged through the highs. All right, we continue forward the next day. This was a euro long, and this was on the 3rd of June. And what we had here is we had a long setup from 1113. So we bring this level down here to 1113, and basically pretty standard stop run confirmation combo here. Stop run, confirmation of the upside, pullback, and then ultimately, from where an entry would have been, you were closing out somewhere around here. Might have been down a pip or two. If you had a best case scenario entry, might have been up a pip or two. I'm going to count it as a break-even trade, as that's what it basically was, give or take a pip or two to either side of that. We go over to the 4th of June. This was the next trade. So the next trade was on the 4th of June, and this was a stop run long from a lower level that we had listed at 53.10. So we had a level there at 53.10. Again, the 4th of June on the pound dollar. We come in, we create a break, we get our candle that breaks by more than 3 pips. That initiates the trade, and then we're looking for a confirmation. We get our confirmation here, and then we get a pullback on this candle as well as the next. Ultimately, this trade was a very easy plus 40. This trade went off, hit the 4% full take profit, and that brings our count up to 6% from the month. Remember that first trade was 20 pips or 2%. And the next trade was, in this case, 40 pips or 4%. With the initial risk being 2%, we're always looking for 2 times our risk as the initial take profit. Therefore, a full take profit trade will be 4% always. A full loss will be 2%. So again, half on the first trade or plus 2%, 4% on this trade brings us to 6% on the trade. We go over to the 5th of June. 5th of June, next day, it was another pound long. And the pound long was from right here at the 53.04 level. So it comes down a little bit. We have 53.04, and again, all these points. I'm selecting these points right about here. This long box every day is the Asian session. So I'm usually doing the review right around here. So these levels are selected, again, hours in advance. Comes down to 53.04. We get a break of 53.04, and what we have is we have a candle that this next candle does not confirm up. It does not close in the upper 1/3 of that candle. Next candle does not confirm up. We finally get a confirmation here on the what is the 4th candle, and then the 5th candle only pulls back to within about 15.5 pips of the low. So it never pulled back to within 15 pips of that low, and in this case that would have been where the entry would have been taken, and it ends up being a good thing. Ultimately comes back, probably would have stopped you out on this move here. So 5 candles, trade is dead. No trade in that scenario. Ends up being a good thing, as ultimately probably would not have survived this pullback. And either way, the exit would have been ahead of the news at 8:30 regardless. But going into the next trade, we go over to the 9th of June. This is on the euro now. So again, going over the euro, the 9th of June, and it was a long setup from 1272. So we had a long setup right here from 1272. We come down into 1272. We get a break of that level. Next candle continues down. Set the lower candle body. It becomes a new number one candle. The count is restarting. If you understand the confirmation entry, that'll make sense. If you don't, well, it's a whole other subject. Bottom line, stop run, confirmation back to the upside. After that, we wait for the pullback. In a scenario like this, where the confirming candle is 36 pips away, we're not going to wait till it gets to within 15 pips of the low. What we're going to be doing in that scenario is the rules state that we'll wait to pull the trigger to when it gets to within 20 pips of the low and use a 25 pip stop, 50 pip take profit. In this case, 20 pips from the low is right here. It's almost at the very bottom of that pullback. So we'd have got filled somewhere around that 1273, 74 mark. You add in spread, maybe 75, 76. Let's just round that up to 75, 76 area. And that would have put you up somewhere around 33, 34 pips. We had so much of this type of scenario this month where we hit, 33, 35, 37 pips, and then we come back, tag us at break even. This is another one of those trades, and unfortunately, it was a break even trade. I mean, it's good that the strategy protects itself. We didn't take a loss on this, but it can get it can get a little stressful when you have multiple trades in a month going that close. That is not even mentioning all the trades that provided a beautiful setup but just didn't offer any pullback. We had a lot of that as well. This month, which ended up being a good month overall, could have been an absolutely blockbuster month, but that's another subject. So anyways, at this point, after this break-even trade, we're still sitting 6% up. And then we have one of the longest no trade streaks that I've seen in really recent history. We went a total of 7 trading days, full trading days, which, again, I don't remember the last time we had that happen. But we had it happen here, and the next trade wasn't until the 19th of June, and it was a pound long. And this is where traders go wrong. They see a streak of no trades, and they start taking stupid trades. And that is what separates a long-term successful trader from a trader that is never going to quite make it to that point where they're seeing that long-term success. Again, another subject, but the point here is we come into 58.50. That was, again, our pre-selected point. So much like I had drawn out before, this level was selected somewhere around here where I was doing the review. So 58.50 was our first point to the downside there. And we come into 58.50. We get a break. We do not confirm up here. We continue down. We finally get a confirmation here, and then we get all the pullback that we would have wanted. And in this case scenario, you can see that resulted in a full 20 pip loss. And that full loss means that our 6% for the month is now brought back down to 4% overall. So we're brought down to 4% at that point on the month, and then we continue forward. We continue forward over to the next trade, which our next trade here was a euro short. This euro short was actually setting up a few days after that trade that we just talked about. Setting up, that trade was on the 19th. This was on the following Monday, so 19th was a Friday. This trade on the 22nd is on a Monday. And it was a short from 1403, again, another scenario where every single day, just to reiterate the point, level selected back around here during the Asian session. So we come into this level here at 1403. It was a fairly new creation of a level. We come back into it during the New York session. Beautiful creation of a level, but we come in, we get a stop run to the downside or a confirmation down. And then what we have is we have a scenario where we don't need much pullback because we're only 16 pips from the high. So we're going to be taking the entry 15 pips from the high, and this hits about 14.5. Hit the entry by about a pip, half a pip, somewhere in that area. And then it was nothing but downside from there. It was a very quick 40 pips. Initial move here was ultimately 50 or so pips down, hit the take profit, full take profit on the move down. I think I actually did a video of this trade that I put on the front of the site. If I remember right, this was a video that I caught live there. Remembered to turn on the camera and caught a nice little trade there. So anyways, that was the following trade. And that trade brings us from 4% over to 6%. And what we have is, or excuse me, brings us from 4% up to 8%. This is a full take profit trade, brings us again up to 8%. Was a shame to see all this downside from where I was getting out of the trade. There was another 200 pips of downside, but the point there is consistency, and I'll take a consistent month rather than a one blockbuster trade every now and then. So, anyways, back up to 8% on the month. We go a couple days with two days with no trades. We go to the 25th of June. This is our next trade. And this was a short setup from 57.08. So again, 57.08 on the 25th of June. So 57.08, that is right here. We get a fairly standard stop run, confirmation back down, pull back on the next couple candles, and then ultimately this trade pushes down to close to 30 pips from where the entry would have been, getting our stops to break even, and then a pullback takes us out at the break even level. So still sitting at 8% after that trade. Then we go into the next trade, which was the following day on the euro, and this was on the 26th. It was a long trade that was setting up from the 1147 level. So here's 1147. And what we have is we have a break of that level. We get a stop run or a confirmation back to the upside. And then over the next couple candles, we get all the pullback that we would have wanted. This candle is about 24, 25 pips from the high. If you were taking it at 20 pips, or excuse me, 25 pips from the low. If you were taking it again 20 pips from the low, that would have put you in somewhere around 1151, 52 in that area. And then ultimately the close was somewhere around the 22 to 25 pip mark, somewhere right around that 2% mark. And therefore we're back up to a total or up to, I should say, a total of 10% on the month at that point. Continuing forward, going over to the pound on the night on June the 29th. This is the last couple trades of the month, and this is again on the 29th. So what we have here is we have a scenario where ultimately we get an upper level which is at 57.19. So 57.19, good level there, and we get a break of that level. With a very strong confirmation back to the downside, and then all the pullback that we would have wanted. In this case, the rule set would have required us to be taking the entry at 20 pips from the high, which would have been an entry of 57.23. And from 57.23, you can see we have about 40 or so pips of downside there. Ultimately, the close on this trade would have been after the confirmation back up, and that would have put you out of the trade somewhere around 22, 23 pips. 22 or 23 pips of upside there in that scenario. So good trade overall. And that trade brings us up to 12% on the month. All right, so continuing forward to the final trade of the day, we had a newly created level there during the European session. We come back, we get a retest that same point, we get a stop run, we get a confirmation down, and then we get a pullback for the entry. This was a frustrating trade, one of many during the month of June. This one ran off to the downside roughly 33, 34 pips from where entry would have been. And, they just got close to, again, do another take profit. Came back, tagged us break even, unfortunately. And that was that on the move there. So could have been an absolute blockbuster month. It was a decent month. It's not a bad month. Ended up 12% overall in the month. Some of you ended up a little bit better. If that first trade of the month was a full take profit for you, it would have been 14%. If it was a no trade, would have been a little worse for you, and you'd ended up around 10% for the month if you're factoring in all these trades. Overall, only 12 trades, 5 break even, 1 losing trade, 6 winners. And, it was not that great of a month, to be honest. I mean, just because the quantity was down so significantly, but the 10% a month compounded will beat the best hedge funds in the world 3 times over. So last month we were at 20%. This month we're at 10%. These are all trades that are at predetermined levels with an exact mechanical entry technique that anybody can learn to use. This is not some discretionary rule set. that you're looking at it and saying, well, should I take this trade or should I not take this trade? It's either a valid trade or it's not. That's the bottom line. And that's why it's so powerful for anybody that's looking to learn how to trade. If you can learn to follow a black and white rule set, you can learn to take every single one of the trades that I just covered. There's nothing, you don't have to be some rocket scientist. You don't have to be some super genius. You just have to simply have the discipline to stick to a rule set and do it consistently. If you'd have done so, the last 2 months just on the euro and the pound are, sitting at 30%. So if you're talking about, if you're talking about a compounded number, that's roughly 32% compounded over the course of the last 2 months. Now, is that a guarantee somebody's going to have those results? No, of course not. I can't guarantee anything. Somebody doesn't follow the rule set, well, I have no idea what type of results they're going to have. But based on the black and white criteria, that is the confirming entries that were valid on those two pairs. Now, what's a way to increase quantity? Once, let's just say you're proficient. Let's say you're doing this and you're proficient with it and you're hitting all the trades that you should be hitting. How do you increase quantity? The simplest way to increase quantity would be to trade more pairs. Your yen crosses are good pairs. A lot of the exotics, some more of the majors, Aussie dollar, New Zealand dollar. There's a lot of ways to increase quantity. That's not where traders struggle. I don't ever have traders come to me and say, Sterling, I'm just taking so few trades. I'm losing money because I'm taking so few trades. It doesn't happen. Traders come to me and say, Sterling, I'm losing money because I can't control how many trades I'm taking. I'm revenge trading. I'm doubling down. I'm averaging down, etc., etc. So our goal is to focus first on quality and then worry about quantity. You can see here with a relatively small quantity of trades, the result was still great. I mean, the result was still high quality results. So if you want to increase beyond that, we have a lot of members that take the rule set and apply it to equities. They apply it to commodities. They apply it to, again, whatever market they're trading at the time, and then also applying it to other time frames. For those that like trade longer term, taking the basic foundational idea of identification of a manipulation point and then waiting for manipulation around that level, and then applying it to, say, the hourly chart or the 4-hour, the daily, and then having good success with that as well. Now, you have to vary certain things. You can't use the exact confirming entry, but the basic rule foundation, the rule set or foundation that's laid, will apply regardless of market and also as well regardless of time frame. One thing that I think is so critical, guys, is that, like I talked about in the beginning, if you're looking to learn, you need not just a course, you need somebody showing you how to apply what you learned in the course in live market every day and saying, okay, this is exactly how I'm going to apply what you learned in the course. And that's what the review does. I would urge anybody that's looking to learn to go ahead and check out our Forex course, our lifetime membership. It's a one-time access to everything that we offer, which is the live room twice per week, which is recorded for those that can't attend. The members forum, the Forex course, the support for us, or the support from me on a daily basis, as well as the daily market review, which is, in my opinion, the most important aspect of learning to trade our method. So again, check that out, and if you have any questions, feel free to visit the site, www.daytradingforexlive.com, or the email, daytradingforexlive@gmail.com. I'd be happy to answer any questions you might have. All right, guys, that's going to do it for me. I will see you all back for the next video. Until then, happy trading.